Option trade alerts. So real-time trade alerts, these are sent via WhatsApp. Please like, comment, share, and subscribe. You can enroll at beststockstrategy.com/memberships. It's only $19 for 7 days. This is February 2022, the option trade alerts. So this trade was a big mistake. This trade was also a big mistake. This trade was too. Oh man. Yep. Just not good. Yeah, PayPal was definitely very, very painful. If I didn't make those adjustments, yeah, it definitely would have been significantly better. February 2nd. So here I closed out the calls. And then I sold additional calls and used that premium to roll down the puts. S&P up 43. And then the VIX and VVIX were up slightly, which is a little bit strange considering that the S&P was up significantly. Facebook fell about 18%. S&P is down over 60. So Amazon reports after the bell. Amazon is up around 20%. S&P was down 112. VIX was up 10%. February 4th. So our Amazon positions were showing a very nice profit. S&P up 23. February 7th, solid opening. S&P down 17. February 8th, sold a put on SPY. Short-term expiration. I feel that the market is oversold temporarily. B+ grade. Sold a lot of calls on PayPal to roll it down. Bought back the SPY put. Held it for 1.5 hours. S&P up 37. Here are my thoughts on the PayPal position. Our PayPal position is one of the most challenging positions I've ever experienced. Usually it bounces back. So we'll have to continue to sell large amounts of calls and roll down the puts. February 9th, fading the up move, sold an SPX call. Sold some additional calls on PayPal, used that premium to roll down the puts. S&P up 65. February 10th, sold a short-dated SPX put. Bought it back. S&P down 83, VIX up 20%, VVIX up 8%. February 11th, rolled Z. So I rolled it. I financed it by selling the calls and then rolled it down. Our break even on Zillow is about 79. S&P down 85. February 14th, closed out 2 puts, financed it by selling calls, rolled PayPal, rolled it out 1 week. Yeah, you see, the problem with PayPal was when I sold those additional puts, it just simply became too big. And that ended up costing me money. If I didn't sell those additional puts, then I probably would have been able to salvage the position for relatively minor losses, or I could have just continued to sell call options and bought it back, and rather sold call options and used that premium to buy back the small amount of puts. But when I expanded the position, that was definitely a mistake. S&P down 17. February 15th. Here I rolled the calls on Zillow, SPX, S&P up almost 70, VIX down around 9%, VVIX down over 8%. February 15th, I just increased the expiration on PayPal, S&P up 4. February 17th, S&P down 95, VIX up 16%. February 18th, yeah, so I'm being less aggressive because the market doesn't have a defined direction. S&P down 31. The 21st, markets closed. The 22nd, sold calls on Amazon. Bought back one of the PayPal puts, financed it by selling calls. Here I rolled it more. Financed it by selling calls. Rolled and financed it by selling calls. You see, so if I didn't sell those additional like 20 contracts on the put side, it would have been significantly easier. And I probably would have been able to, I don't know if I would have been able to roll the puts all the way down for a profit. I'm not certain about that. But if I did, if I didn't sell those additional puts, then the PayPal position would have been a minor loss if I continued to sell a lot of call options and just get rid of the puts that I had in early January, or in January, prior to selling them, prior to selling additional put options before the February earnings announcement. February 22nd, so the S&P was down 44. February 23rd, sold a call on SPY. Might have to consider closing out PayPal. I'll watch it tomorrow. And although it seems like its descent has slowed, my concern is that the loss becomes too large, then it'll take a long time to recoup. Yeah, you never want to take a loss where it's going to take you more than just a few months to recapture. Because even in this situation with PayPal where I made a mistake by expanding the position on the put side, you don't want to be in a position where the losses are going to take you more than a few months to recapture. You don't want to be in a situation where it's going to handicap you in the future. So as painful as it sounds to close out a position for a loss, you don't want to have it affect your portfolio long term. If it costs you a few months of profit, okay, for a bad trade, then it's not the end of the world. But anything more than about 2 to 3 months of profit is going to be very problematic. S&P up 63, February 25th. S&P up 95, February 28th. Sold some additional calls. So here I rolled the position out. Roll PayPal calls just to give a little bit more safety net. I think at this time PayPal was trading at about 111. S&P was down 11. VIX up 9% and VVIX up about 5%. The market rallied around 1% over the last 20 minutes of the day. Tesla up over 7%. So that's it. If you want to enroll for the 7-day trial, it's only $19. You can enroll at beststockstrategy.com/memberships.